My name's Joe Walsh, Managing Director, Lepidico Limited. We're a vertically integrated lithium development company that's right on the cusp of a development decision this year for our phase one project, which will be coming into production 2025.
Hello, Joe.
Hello, Matt. Good to see you again.
You can see, so you're over here, obviously, attending the various conferences at the moment. I think there's you've got what do you got? One-to-one.
Mm-hmm. Yes,
in Indaba.
Yes.
And there's another battery one here as well, wasn't there?
Yes, there was BMI's Battery World Tour Cape Town.
A good one?
Yeah, it's been really good. So this is probably the best one-to-one that we've seen in 5 or 6 years.
Yeah, I'm getting that vibe. I think people are back here. They're looking for investments, looking where to place their money. And we're going to talk about that with you. So why don't we do a little summary of exactly what happened in 2022? Because you got absolutely zero credit for anything you did in 2022, but you did some important stuff.
Absolutely, we did. I think that we've really progressed the project, the business. We've undertaken, I think, a significant de-risking of the project. We completed front-end engineering and design for both the upstream concentrator and the downstream chemical plant. Yeah. And there's 18 months of work right there. Yeah. That body of work completed in November. And it gave us updated capital cost estimates and delivery schedules for both plants.
Okay, so you know where you stand, and that's important because in the backdrop of COVID and supply chain issues and energy change and energy pricing out there, it's important to be up to date, know where you stand, because I think there's a lot of DFSs that are slightly out of date, just a little, and that's problematic because in terms of commercial partners, strategic partners, industry partners, they want to know where you stand, right?
Absolutely, they do. And all of our studies, all of the work that we've done over the last 2 years, those new estimates, also that demonstration plant that we ran last year as well, all of the results that came out of that have been extensively due diligenced now by Baird Albert Australia, a very credible group who's doing the technical due diligence for the US government's International Development Finance Corporation. Right. And one of the things that I thought was really telling is after reviewing all of our latest estimates, they opined that for a project at our stage, which is very advanced, the contingency should be between 5 and 10%. We're 9.3, 9.4%, so at the upper end of that range. So I'm comfortable that there's a degree of conservatism in these numbers, and they are current. Okay,
the other group of people you need to influence, financiers, right? So we've talked in the past about multiple ways that you hope to finance this. The US, I think it seemed to be where you were leaning last time I spoke. Has anything changed there?
We're very consistent in our approach here, Matt, that the US government's International Development Finance Corporation is mandated to be able to lend to projects in developing countries. Namibia obviously fits in that category. We've been working with DFC now for over 2 years, and it's an exhaustive, comprehensive process. You've got to jump through all sorts of hoops on the environmental, social side, technical, economic. We've been through all of that. Beginning of this year, they've appointed legal counsel, which puts us on the home straight.
Why do you say that? Because obviously they're still in the race. That's good news, comforting for your shareholders. Appointing legal counsel does what for you? What's your expectation of that?
So that's doing the final review of all documents, contracts, agreements, and that stage doesn't start until you've got ticks in the boxes for environmental, social, technical, economic.
Okay, so for all of that, now we're going to actually sign documents. And what's your expectation from them in terms of the amount of capital, if you get that far?
Yeah, absolutely. So in Namibia, the capex there is about 63 million US dollars. We think the indications are that DFC will be there for up to around 50 odd million, and they can actually lend that amount without going for their own board approval. So that kind of streamlines that process. We
forget this, don't we? Do you know what? We have had this conversation. I forgot. It's such a low capex project, and you're going for a really big chunk of is it non-dilutive? What type of money is it?
So, that's debt. So that's pure debt.
Right.
Downstream in Abu Dhabi, the chemical plant's just over 200 million.
Right. And they're in for both projects?
No. They cannot lend to the UAE. It's a developed economy.
Okay, well, let's focus on Namibia. So
Yes.
potentially up to $50 million with a $63 million capex project. You'll want to raise a little bit more money on top of that.
Yep.
OPEX, etc., and a bit of running around money. Where's that going to come from?
So I think that we've got the core debt piece sorted out. We're in discussions with a number of different strategics. So I think that there's still good opportunity for some strategic money coming in.
What does that mean for you?
So that would give us, I think, a group with great alignment of interests with our business model,
Such as?
involvement in the wanting to get involved in the lithium space and involved in the electric vehicle supply chain.
Because you've already got Traxys involved in the background.
Correct.
Off-taking.
Yeah, we've got a binding off-take arrangement with them for the lithium.
For how much of it again?
So that's all of the lithium for the first 7 years.
Right, okay, so big chunk. So your strategic partner would not get that, presumably, or would have to come to some arrangement if they wanted it.
So don't forget Traxys is a trading company.
I know.
So
it comes to some sort of arrangement.
Yes. So
Right.
we've been working very closely with Traxys for the last year to place that material into the supply chain.
Okay. So if they're trading anyway, and they want to mark it up, flip it on, it's fine. It makes sense. So again, I want to understand the types of companies you'd be talking to, because we've spoken to a lot of battery metal companies. We're talking about OEMs moving upstream, wanting to secure their supply, and we're talking hundreds of billions of dollars being, pushed that way, which is new. 2 years ago, that didn't happen. It's a big deal. So for you, what type of conversations with what types of companies when you say strategic? So I'd push you on this one.
Sure. No, that's good. There's a lot that's new. And being in the UAE and Abu Dhabi, we're seeing an enormous increase in interest in that part of the world. Mm-hmm. We're now literally in the last 3 or 4 months, we're seeing for the first time battery manufacturers, cathode manufacturers, seriously looking at joint ventures within the UAE. Our lithium is going to be the only supplier in the region at this point in time. So, and it's a critical component of that supply chain. And it's I think it's an incredibly attractive place to be doing business. You can develop within an industrial-free zone where there's no corporate tax, no import-export duty. It's got some of the world's most stable and affordable energy prices. And in this day and age, that's a great bonus. Yeah. And they're desperately trying to diversify that economy away from reliance on hydrocarbons. Yeah. And developing an electric vehicle supply chain is a great hedge.
Diversifying away from, I think that'll be a long time before that happens. But they want to add on things like hydrogen energy and the battery supply chain is something they want to play with for sure. And they've got a lot of capital there. So I understand the kind of US debt component. Great. A strategic partner, you sound like you're leaning towards the Middle East, and that's great too, because I think they're very keen on not just the hydrogen side, but also nuclear as well. We're hearing, so it's fantastic, and they've got all the oil. So it's quite nice. Would that same strategic partner be looking to get involved with the chemical plant in Abu Dhabi as well? Then, presumably, given they're based there or thereabouts. Yeah. Right. Okay. So same groups.
Absolutely, and we've also. Well advanced now in our discussions with more traditional commercial lenders.
Right.
And
local though.
So we're looking at international lenders, largely European, who are regular lenders into the material space. Right. But also regional lenders in the UAE.
Because I mean, one thing about debt in the UAE is pretty cheap if you can get it. Right, there's different types of structures over there, and again, depending on the strategic, you would do that at asset level for both, or would they be coming into headco?
So both are on the cards. So there is definitely interest in direct asset investment in the chemical plant in the UAE, and also investment at headco.
Right. So well, I guess you'll let us know, because you wouldn't necessarily need to own the plant then. It would just, You can do any sort of structure you want. So you're looking at all of the above.
We will be the operator today. Yes. The important bit is that we'll be the operator. It's, we know the technologies. We're the best operator.
Okay, fine. Okay, that's interesting. And in terms of intellectual property, then that obviously sits at headco level. Right. You've still been 100% owner of that, which gives you options and potentially for licensing that.
So if you remember, we've already done one license deal.
Yeah, but you got to do more. That's how you make money.
Well, we can do more, but the other bigger picture piece in all of this, and we've already started to discuss openly phase 2. Mm-hmm. We're now appointing a site selection agent to evaluate potential locations for phase 2 chemical plant in the US. Right. We have our own internal capability to evaluate Namibia and the UAE for a phase 2. Okay. So the pre-feasibility study will consider those three jurisdictions.
I just wanted to understand kind of potential revenue streams. You've got to keep telling this growth story, right? Yeah. So I know you're keeping it simple, saying it's phase 1, we'll focus on that, get that over and then we'll move to phase 2. Makes total sense, because all of the above needs to be financed, and you want cheaper and cheaper access to capital, presumably. Okay, so can we talk about the UAE, that kind of ecosystem? It's something that is a free port zone?
Yes, it is. So the KEZAD Industrial Park is 50 square kilometers, and there is a free zone within that. And that's where we're building our plant. Okay, so must be quite appealing to strategics, for sure. Okay, and we're looking at can we just go a bit macro here? Sure.
You talked about redoing your numbers, and you've got to get a better sense of the economics there. It was a brutal year last year for everyone. Prices went up across the board, but you know where you're at. Hopefully, some of those prices coming down, you'll be a beneficiary of that this year. We hope. But what's your take in terms of the lithium pricing? Because it's done you a lot of favors, right? In terms of what the economics look like for you. Is this sustainable? Can this keep going?
So we have seen over the last couple of months, prices have plateaued and started to pull back somewhat. Almost all commentators have prices pulling back over the course of this decade to anywhere in the low 20s to the high 20s. Some of them are now into sort of $32,000 a ton long term. Mm-hmm. If you look at most of the projections for supply and demand, there is just this growing deficit as we get into the latter part of this decade, and it's becoming enormous.
How can that be? Because you've got lots of some Americans, certainly on DLE side, we're talking about they can supply the whole world's needs. So there's going to be so much coming through, isn't there?
So I think a few of these do need to get past the pre-feasibility study stage. And the key is to be getting these projects past DFS, through front-end engineering and design. There's an enormous amount of de-risking that needs to be done here. And remember, our project is around 5,000 tons. That we've scaled it there to manage risk for our first project. We've already seen all of these larger projects take considerable amount of time to commission and ramp up. And when you look at the demand trajectory, it's like this. If you get then a delay of 6 months or 12 months on the supply side,
different shape,
there's a gap appears very quickly. And so I really do think that we are going to see that. Projects are tending to get bigger and bigger, and that puts you further up that risk scale curve.
Well, there's two things about lithium. It's the kind of ex-China component, right? And then this kind of the risk profile. Like, not all developers will get into production, whatever they say, whatever they put in front of you. So that kind of bodes well. So does it become... It's not quite a first mover advantage, but do you know what I mean? If you in the leading pack, as it were, to get into production, is that what you're aiming for, or is it a case? How do you time it differently? How do you time this market?
I think you just have to run as hard as you can and push as hard as you can, and we're exactly doing that. Right. Well, I think that I don't think we hope for the best. I firmly believe in the fundamentals here. And that we are seeing this very dramatic growth in demand. And I think we all know how difficult the minerals industry is and chemicals industry to bring new projects on, and it's invariably takes longer. We're fully permitted. How many projects are still trying to get over that hurdle? And I think that there's now an awful lot of impetus to get over those hurdles, particularly in the US. But those are still hurdles to be got over.
So how do you move from being valued with multiples that miners attract to being valued with the multiples that chemical engineering companies get? Because it's a very, very different environment. So tell us where you think you are now in that journey, and when you think you could get to a point where perhaps you're viewed differently.
It's a very good question, Matt. And I think we are still being valued as a developer. And the last piece of the puzzle for us, because we've got most of those pieces already in place now, is to get visibility on the financing.
Nice.
And I think there's plenty of references out there that would suggest once there's some granularity around that piece, so long as there aren't other obstacles like permitting, etc., which we've already addressed, then there should be a re-rate.
Okay, so I know we're going to go slightly over old ground here, but with the US option, for example, they've appointed legal counsel, so it's significantly advanced, and so the timing on hearing something from them, I know it's government, so it's who knows, but give us a sense. Is it this year?
Oh, absolutely.
Okay, is it this half?
We're pushing on that.
Okay. I know it's difficult. Okay, so there's that bit of it, and then there's the Abu Dhabi bit, which is a bigger ticket size. But given the sorts of monies that are available there, and given the intent that they have to get into this space, possibly even be world thought leaders, world leaders in that space, those sorts of conversations, are they going to conclude this year?
Oh, absolutely. Like, these things are tracking in parallel.
Right. Okay.
And so, like, I see them really. The DFC piece, the commercial lender piece, the strategic piece, really coming together.
Okay, so that delivering. Well, I know they're very different projects, but you would. Where's the? Because you've got to look at the same. Like, you're building businesses, they've got to get into production. They've got to produce product, hydroxide or whatever it is that you want to sell, and you've got to generate cash. Remember that old-fashioned thing?
Yes.
Money. Where are we looking to this point? Where's this point in time that we're looking to?
2025.
Okay.
So we're
not too far.
No. It's not. And we've now got the control schedule from completion of front end engineering and design last year.
Right.
So we've got, I think, a very good handle on what the schedule looks like to be for this implementation phase for the project.
Okay.
So we're looking at mid-2025 for that.
Isn't it interesting? And I know you've kind of got seasoned by product, etc. But people stopped talking to you about the technical challenges. People are talking to you about revenue generation and talking about money. That's quite nice, isn't it?
It is, and these days, invariably woven into that is a discussion on environmental and social.
Yeah, but that's kind of beyond. Yeah, well, in terms of what, incorporating it into your flow sheet or incorporating it into the process?
It has to be part of the business model,
right?
Okay. And part of any discussion with lenders, strategic investors, is what are those environmental and social credentials look like? What are those exposures? And I think our business can demonstrate that we've got exceptional credentials in that regard, and the jurisdictions in which we're operating support that. The UAE, particularly Abu Dhabi, is very aggressive in developing commercial green hydrogen, for example. That will take our greenhouse gas emissions from maybe 25% lower than the typical integrated spodumene project to down to probably best in industry, down around 3 tons per ton.
Yeah. I mean, there's a kind of, I think there was ESG had a good run for 2 years. Funds rebranding themselves ESG compliant, and I think that shine's come off a bit in terms of how investors look at the company. You're going, this is essential. You don't go ahead without this stuff. You don't get an investment without this sort of stuff. Appreciate that it's about making money, but if we don't deliver on all these factors, that's a massive barrier to delivery. So how do you? And I say it's important, but I'm also cognizant of the fact that most managers are show me the money,
Yes.
and get on with that side of stuff now, and stop talking about ESG. How do you feel about that? Or,
I'm happy to be talking about the money, Matt. I really am, and cash flow, and that has always been the business strategy, is to get to free cash flow generation as rapidly as possible. And I think that we've been on quite a journey, and now that is actually on the horizon.
okay, well, I look forward to hearing more from you this year. Feels close, right?
It does feel close. Thanks a lot, Matt.